interestingly, you just had the oil minister speak there, and the government is said to be working on a proposal to rework the subsidy sharing formula with ONGC to improve the state-run company's profitability. Tuesh has been tracking that one for us. Tuesh, take us through what you've learned and how this could actually play out for ONGC.
Well, yes, there have been reports saying that the oil minister has gone ahead and given us the statement that they would be looking into reworking the subsidy sharing formula for ONGC. Now, if this is the case, this is likely to benefit ONGC greatly, as if we look into the prospects of how ONGC has been managing the subsidy burden. Now, if we give an example of how the kerosene subsidy burden is being borne, now the government spends around 31,000 crore rupees as kerosene subsidy. Now, of this 31,000 crore rupees, 30,000 crore rupees is borne by ONGC itself, or rather oil marketing companies themselves. So, and another 676 crore rupees is borne as fiscal subsidy. Now, so far as the government looking into reworking the formula for oil subsidies are concerned, this is likely to benefit the prospects of oil companies like ONGC and OIL, as they would have to deal with a lesser burden. Now, further, keeping in mind that the price of crude has fallen to such an extent that the government can afford to deregulate petrol and diesel, the likelihood of reducing subsidies is the most feasible right now for both the government and for oil marketing companies.
All right, to take us through a little bit more on the likely impact of this going forward, we've got Piyush Jain joining us from Morningstar. Piyush, just talk us through, your reaction to this and the kind of implications the subsidy sharing formula could have on ONGC.
Hi, Ava. Hi. So I think it's positive. So if we see the series of events, ONGC got the deregulation of fuel prices, which means now they had to bear less subsidy. The only thing which was last remaining was a clarity on the subsidy sharing formula. So now, since it appears that the government would be coming out shortly with the subsidy sharing formula, I think it would be fair for ONGC shareholders in terms of low subsidy burden would actually increase the cash flow over the next 3, 4, 5 years. So net positive, but then we have to keep in mind that ONGC is largely an upstream company. So while the crude prices are bound to remain subdued over the next 1 year, it seems so. So I think the major part of the improvement would come, I think, with a lag of 1 year, as the margins would remain subdued. But I think profitability and both the cash flow is going to improve as we move over the next 5 years.
Piyush, take us through as to what kind of rates they've actually been seeing historically, and how does this really play out? Because oil prices really have fallen quite a bit, but again, ONGC doesn't really stand to gain that much.
Definitely. So, as you know, their basically sharing was coming somewhere around, the realization was somewhere around $40.
Okay. And
once we are going to see that the subsidy sharing is going to be revised, the crude prices are lower, but our belief is that we see over the next 5 years, the mean reversion will happen. And if I take into account of 2008, I think over the long-term range, the crude prices would move up. So if I look at that and compare to their realizations, I think their realization could move closer towards their demand of somewhere around 54, 55. And even an improvement of $10 to $15 per barrel will be very good for ONGC. And I think the more important thing is whether it's conceivable. I think it's conceivable because the fuel prices are now deregulated, which means that it will be very easy for the government to give them a better subsidy sharing formula.
What about the stock then? I mean, it's up almost 3% today. What are you recommending clients to do with the ONGC?
I think ONGC in the PSU oil pack, I think ONGC is one of the prime picks. So I think if you're looking at a long term, this is definitely worth accumulating. It's quite a good long-term, good upstream story in India in the PSU space. But the only caveat here is there is an ONGC FPO coming, and usually, as you know, when there are PSU FPOs come, generally stock prices underperform. So keeping that in mind, and number two, this is an upstream company. Probably over the next 1 year, things could remain subdued on the margins. But on the long term, definitely worth accumulating and keeping an eye on.
Piyush, any disclaimer as well?
No, I do not hold any material position on that.